Thursday, March 28th, 2024, Maneco 64, home of alternative economics and contrarian views. So the UK economy has fallen into a recession. Yes, we had numbers this morning from the fourth quarter of 2023. Yes, it is backward looking, but it was a recession nevertheless, because we had 2 consecutive quarters of negative growth. Unfortunately, I think things are even worse than the data show, and I'm going to talk to you about that. I also want to talk to you about the fact that just because the overall economy is in a recession doesn't mean to say that you can't prosper or survive and even prosper. The only reason I'm talking about this is to give you an idea of what's really going on out there and what the government and the powers that be at Threadneedle Street are going to keep doing. Because for them, it's important. It's how they stay in power. We can't stay in a recession for that long, or else it's the end of them. And that's what the voters look at. And yes, and the Bank of England, of course, is instrumental in helping the government. It has been for hundreds of years. And therein lies the problem of central banking, which is, of course, a monopoly. So before we look into the news that came out this morning about the economy, just wanted to say that if you enjoy my channel and you watch my videos regularly, make sure you subscribe to the channel. Make sure you hit the little notification bell. Back to the UK economy. And I would say that this applies to Europe, the Eurozone. They're not doing that well either. Germany isn't doing that well economically. What about the United States? Well, the United States is a little different, even though whenever Western countries are in a recession, you can bet all of them are. And I think it's only a matter of time until the US goes into recession. The reason it's been able to escape a recession is because it still has a little bit of firepower through the dollar, which is still hanging on by a thread to its major reserve status. And what that means is that the US can just print money, borrow, deficit spend a lot more than the UK or other countries can. And that, of course, is where GDP comes in, because, and it's why I said the GDP numbers are actually, in my opinion, not as well. They're worse than they're being publicized by the government and the statistics office, because the way it's calculated is they add consumption, they add investment, they add government spending, and they add exports minus imports. So if your country is running a trade surplus, that adds to the GDP. If you're running a trade deficit, it subtracts from the GDP. Government spending now, they call it government investment, which is quite funny because governments don't save and governments don't invest. What governments do is they extract wealth through taxation from the private sector, and then most of the time they just waste it. It's called, in my view, it's called spending, but they call it investment. So what that does is that it adds to the GDP, especially when you're running deficits like you see here, like the UK has been running huge budget deficits, especially since the 2008 crisis. Look at during COVID, it was, I think, 15% of GDP, and it's still around 5 and 4%, which is more akin to deficit spending during a recession. Well, we are in a recession. And the other reason the numbers, in my opinion, are worse than publicized and worse than the ONS calculates it is because they've been changing the definition of CPI, the components of CPI, which they use to deflate the GDP. And what does deflating the GDP mean? Well, even government doesn't cheat as much. What they do is that they accept that they inflate the money supply and debase the currency so that it makes GDP look better because people have to spend more money. So what they do is they deflate it by the CPI or some kind of GDP deflator. But as we know, and I spoke about this last year, or was it? It was in 2022. It's been almost 2 years already. That in May of 2022, the government made the ONS change the methodology for the CPI, and yes, it is a lot lower than it used to be, not higher. They're always changing it to make it lower, so they can tell you that inflation is low and the economy is growing. But even with that change, we're still getting a recession. Yes, it wasn't a deep recession, or hasn't been a deep recession so far, and we still have to see what the numbers for the first quarter of this year are going to be. But we saw minus 0.1 growth in the third quarter and minus 0.3 in the fourth quarter. So technically, that is the definition of a recession. Whether it's going to be negative in the first quarter of this year, I don't know. But GDP is probably a lot worse in real terms. And that's not to talk about the RPI, which is always a lot higher, but they've abandoned that, of course, and they've come up with CPI and they've changed CPI. So that's why I think things are a lot worse. And what do governments and central banks do when the economy is not doing as well? Well, they inflate. So what that means, I expect the Bank of England, despite the fact that inflation hasn't really been reined in, or prices haven't been reined in, they're going to start cutting again. The government is going to start spending even more, and your currency is going to debase even more. And I said the reason why I'm talking about this is not because I just want to point fingers at the government, the Bank of England, and say, oh, the economy is a lot worse. It's just to show you what is really going on. And I don't know your circumstance. I don't know your skills. I don't know how old you are, your whatever. But I think it's good to have an idea of what's going on in terms of monetary policy, fiscal policy, so you can help yourself. And as I said, just because the overall economy is in a recession or even booming doesn't mean to say you're going to do well or badly individually. And I think that's up to you. I think the most important thing is to know what's happening to your currency, to the economy, and act accordingly and not let it get you down. Go out there and do your best and stick to what you know. Have discipline. Work hard and smart. Yes, some people say it's better to work a few hours and do really well than work long hours. But I can't say what's the right thing, as long as you're happy, I think. And try to avoid listening to the mainstream economics commentators and economists. Stop listening to the government. Stop listening to the Bank of England and do your own research. Look at these statistics if you want, or just listen to me, because you can bet I'm going to try to give you the clear picture as well as I can. So there you go. And this applies not just to people here in the UK, it applies to people everywhere, be it in the US, Australia, wherever you are. Keep an eye on the gold price. That's really important. And I think gold usually does fairly well in a recession, and we're seeing that already. Gold is breaking out. It looks really good technically, but that's all I'll say. Don't want to really jinx it, but I think in the short term, yes, there could be volatility, but long term, it's really broken out. And for those of us who've been able to acquire some gold and silver, yes, we will be in a better financial position, I think, than most. Unfortunately, what it's going to be pointing to is a further deterioration in our economies. And I think the biggest problem here is the debt. We've just got too much debt as a country. The monetary system is based on debt, and the debt has to keep increasing. And that's what we're going to see from the government and from the Bank of England. They're going to keep pushing more and more debt through fiscal policy, through money printing, low interest rates. And the City of London, the mortgage providers, that's what they depend on, and they're going to keep pushing it on you. But live within your means. Be careful with too much borrowing, I would say. I'm not saying you shouldn't borrow, because I did when I was younger. But make sure you don't leverage yourself too much, and make sure that you're comfortable with your income and your financial situation, so that you can continue to service that debt. And talking about debt, I was reading yesterday that a lot of people, middle-aged people, are taking on very long mortgages, like 30 or 35-year mortgages. And pretty soon, a lot of them are going to be paying into a mortgage, paying off a mortgage after they've retired, after 65, which is not really a good position to be in my opinion. And you might think, being an American, well, if you have a 30, 35-year mortgage, it's fine, you can fix it. But not here in the UK. The term might be 30 or 35 years, but the rates are fixed usually for 2 or 5 years. So there's a lot more risk in that. So let's just quickly look at the markets this morning. Tomorrow, the markets in the UK and most of Europe are closed for Good Friday, but I think it's will be open in the US. But anyway, it's 8:23 a.m. London time. We've got spot gold at 21.94. That's virtually unchanged here. The high's been 2200. The low's been 2187. And with the weak GDP data in the UK, the pound is down 0.25%. So I think we're making a new high here. We're near the all-time high in the sterling price of gold at 1,740. And if you're interested in buying more gold, or buying gold for the first time here in the UK, check out my affiliate, Gold Investments. They've got a few deals going. You can look at it in the description. One thing I would say, the Krugerrand deal is interesting, but the problem with the Krugerrand for UK residents is that it incurs capital gains tax, and capital gains thresholds are going down to 3,000. as of April. So if you're going to buy a big quantity of gold, be aware that Krugerrands are probably not the best solution. I would stick to sovereigns and Britannias, gold sovereigns and Britannias. But yes, 1,740. I think we were trading about 1,000 pounds lower when I started this channel in late 2015. So there you go. What about silver? Well, silver again is a little bit disappointing here, but I'm sticking to silver. It's down 20 cents. It's trading at 24.44. High's been 74, and the low is right around here, around 41. The stock market, the futures, the Dow, Nasdaq, and S&P futures are down slightly, but virtually unchanged, I would say. And as I said, sterling is down 0.25%. The euro as well is down 1/3, so the dollar is a little stronger. Crude oil is up here this morning. It's up about 0.5%. WTI is at 81.66. Brent is at 85.75. High-grade copper is unchanged at 401.65. What about cocoa? Some people call it cacao, which I'm not sure. I mean, I'm originally from Brazil, and we do have a lot of cocoa trees, cocoa fruits in the northeast of Brazil. And in Brazil, we call it cacao, but in English, it's cocoa, C-O-C-O-A. Anyway, cocoa is continuing to move higher. It's almost at $10,000 a ton. It closed at 9,500 yesterday. So, yeah, with that, I'm going to wish you all a very good day. And for those of you who celebrate Easter, a very good Easter weekend, Good Friday and Easter Sunday. And I'll talk to you later. Take care. Bye.